Let's have an interesting conversation on commercial real estate. As we approach 2021, Nigeria's commercial real estate sector is faced with both challenges and opportunities. Shopping malls are, physical structures that require foot traffic, and shoppers, in order to thrive, various attractions from cinemas to restaurants and supermarkets are looking back on a tough 2020 and looking to 2021 with a mix of optimism and caution. So our next guest is a player in the commercial real estate space and believes using mixed-use assets is the best way to navigate the new year. We're joined by Mr. Laide Agboola, who is the co-founder and CEO of the Purple Group real estate and lifestyle company. Good morning to you, sir. You're welcome. So to kick things off, what are mixed-use assets within the real estate context?
Thank you. Mixed-use asset, like you probably guessed, the word mixed in the context of assets would definitely imply the various asset classes that go into the commercial real estate space. So you're talking about the hospitality space, you're talking about the residential space, you're talking about the office space, most of which also have their separate subdivisions. So for Purple, for example, within the retail space, we play in the neighborhood center form. In the residential space, with our nano projects, we're playing in the sort of apart hotels, short lets, and long stay areas, including co-living, which is sort of relatively new to the market. And then when you look at the office space, then you're looking at areas along the lines of co-working, private offices, and all of this sort of come together into one single play would then be what you tend to call a mixed-use asset, and it doesn't necessarily have to encompass all of the various categories, but it definitely sort of includes a good proportion of each one of those. When you bring them all together, then you have concepts that you tend to talk about along the lines of workshop, live, play, drink, depending on what services you provide within these build assets.
Fantastic. All right. So that sounds like a varied portfolio within that commercial real estate space. Thanks to the definition. So the Purple Group owns real estate property. It has tenants, which are different businesses. How have you coped with rent collection in 2020, considering everything that we've been through in the year so far?
It's been a very challenging year for everybody. I mean, it's a unique year, I call it. I call it a very unique year. It's one of those years that you definitely have to test your resolves and your ability to move things forward in different ways, because 2020 is a year that has never been seen by many of us or all of us. The worst we've seen is in 2016. In 2020, we've had to experience unique discussions with our tenants who are partners, and those tenants and partners we've sort of had to come up with scenarios where we work out rental payments, where we work out grants that we'll have as landlords have to give to this particular tenants so that they can keep in business and keep operating, which involves us backpedaling to areas around talking to our investors and our providers of funding to ensure that we can give leeways both on the repayment side as well as on the collection side, so that we can sort of have a matching scenarios. I mean, it's not helped us, so to say, that we've had 3-4 months of lockdowns with respect to COVID, and then followed it by the protest, and then now we then had riots that came thereafter. So we've had to deal with a special scenario in the Nigerian context of things, and like all things in Nigeria, very resilient. We've seen in our own context, we've seen very strong tenants that we've from both international and domestic players, and we've seen a very quick turnaround for a lot of our domestic players in terms of the ability for them to continue to trade, in terms of the ability for them to begin to generate their revenues. Nigeria, like all things, is always resilient to all sorts of different scenarios, and we've seen a scenario in this particular instance where we're seeing a turnaround, and collections continue. We've had a very good play with the food guys, with the grocery guys, with the pharmacy guys, and I think for us in Purple, at Purple Maryland, for example, our emphasis has always been on the essential side of things. So our pharmacies, our banks, our grocers, and then the consumer staples. So you start to look at our entertainment areas, the cinemas, the entertainment areas for family recreation, and all of those things have sort of begun to show us how we've sort of can bring these people back into the bring footfall back into the centers. So we've had a good mix of a mixed use approach to what we do has obviously allowed us to be able to bring footfall back into play. Nollywood has been good, despite the fact that Hollywood has not really released anything this year. We've seen a good turnout of Nollywood movies, which is why that area of the economy needs to continue to thrive. So we've seen a good bounce back from cinemas, and it's going to be a gradual process. We've seen our footfall continue to improve, and as such, collections also begin to get better and stronger. We've seen that drive from the end of August into September, October, and it's been a gradual movement into December as we move into December 2020. So we are quite bullish and confident that going into 2021, all things being equal, and with us being able to continue to, with the economy continue to, hopefully should begin to stabilize and get people to move in the positive direction.
Fantastic. I'm glad that you are, you have this oversight of all the different businesses there where you're talking about cinemas. We're actually looking forward to talking to a cinema exec later this week because there's this move from physical to streaming videos over in the United States, and we're trying to see how that impacts things. But as you've mentioned, Nollywood has picked that up, so that brings footfall into those areas. So thank you for mentioning that. So as you go into 2021, you're looking at, yes, Purple Group now expanding within Nigeria. What's the mood of investors that you either have talked to already or approached about the expansion? How are they seeing things?
I mean, we started 2019 with a plan to activate our expansion plan in 2020, which were cut out by the COVID-19 lockdown, and a lot of our funding strategies and were sort of derailed in February and March earlier on this year. We're in the market for a corporate bond issue, which obviously we had to sort of change our strategy. I think the most important thing is we've had to focus on our direction, but we had to change our strategy midway to ensure that we can get to where we're going, albeit delayed till the end of this year, but we are now in a situation where we are moving things forward. Now, in terms of funding strategies and all of those things, we've seen, one of the good things that have happened from the economic perspective is also obviously the low interest rate regime. Low interest rate regime, obviously, with treasury bills going into close to zero region, we've seen a scenario whereby funding needs to go in certain directions. And one of those directions is obviously the real sector. People need to start making their funds work. They need to start pumping it out into areas of the economy that allows for growth. And one of those things is real estate, and that's where we play. So we've had a good fair share of our own support from indigenous domestic players. We've obviously the international side of support, which we enjoyed in 2017 from our South African partners, obviously is one of the areas that we then begin to look at how we fast track that process out of the capital structure and go back into the Naira structure, given a lower interest rate regime, and get more participation from domestic players. If you look at the best of markets where commercial real estate and mixed-use real estate sort of play, you will see in South Africa that a lot of those developmental assets that you have there in commercial space is funded predominantly by the pension fund industry. This is not a call for the pension fund industry to then support commercial real estate, but then the REITs, commercial REIT in itself, whether it's a company REIT or a fund REIT, is an area that we are looking at in the next year or two for a potential listing of our assets on the stock exchange to ensure that we have access to the pension fund industry. So the pool of funding at over 11 trillion or close to 12 trillion held by the pension fund industry is a very solid base for us as domestic players to tap into. But then obviously we need to begin to more organize ourselves in terms of corporate governance, and we begin to organize ourselves in terms of how we structure our transactions how our build costs should remain lower, how the dependency of our asset classes and should be more on the strong domestic players. And I think the response from the institutional domestic players should also be strong when you have some of those things that we as Popul have begun over the years to put in place. There have been a recent REIT structured and put together, which was fairly okay in the market recently. And I'm sure that we should begin to see more of those things to be able to tap into the growth that commercial real estate has for domestic players and for the industry as a whole.
Thank you for that. Very in-depth answer there. You're not the only one looking at pensions. There's news that the governor is also looking at pension assets as well. I'm glad you mentioned foreign investors. How have you dealt with foreign currency loans and exchange rate dynamic in Nigeria in 2020? I mean,
we have the first-hand challenge. We took $12.5 million in 2017 from our South African partners, Vantage Capital. So for us, we've been riding through it relatively okay. In 2020, of course, with the challenge with COVID and with all of the other challenges that we've had with NSAS and the riots, has meant that we've had to have very difficult discussions with our partners, and luckily we are having some fairly good headway with the way we're looking at things. With more funding that we've now brought into place and begin to ride out this repayment structure, we've now seen a scenario whereby we have loads of naira in the bank, but we don't have sufficient dollars to now match that outflow back, even using our certificate of capital imputation. We're working very closely with our banks, and we're trying to do all of those things. So, but as more funding then comes into play and we begin to cycle this out, we then see a scenario whereby we now have larger dollar remittance issues that we need to sort out. But we know the Central Bank of Nigeria is taking very bold steps and taking some very interesting steps that we're watching quite closely. For us, for example, we have discussions with FMDQ this afternoon on options available for us to be able to access some of these FX requirements that we need in the immediate term and in the short term, because our fast track approach is to then go from dollars back to naira. Because if you have dollars at 9, 10, 11%, which was what you had in 2017, 2018, and now you have naira. I know Cardinal Stone, one of our financial advisors and partners, recently just closed their $5 billion bond, 5-year bond at about 7% only on Friday. And that shows you quite clearly that, with the depth of funding that is available in the market, everyone should begin to look at how they restructure their books and restructure their finances. And this is one thing we're taking very seriously and we're taking very closely. At the same time, we're taking advantage of that position to do our expansion plans, both at Populeki and also most likely our expansionary plans for Leave at Popul, Maryland.
Excellent stuff. I've only got about a couple minutes to go. I want you to join these two questions together. One, if local investors can plug that gap as far as funding is concerned, and then your outlook for 2021.
Yes, the depth of funding is there in the local market. So in the domestic market, we're very convinced that the domestic market can play a very important role, especially for developers like ourselves that have shown over time the perseverance and the strength to continue and to continue to develop the space. For 2021, I think the mixed use space is one thing to watch out for. Pricing is important in terms of how we price our products and ensure that the affordability of those products appeal to the market. So both on the retail or commercial side of things and on the apart hotels or residential side of things. The days of being able to churn out $1 million properties into the market space and expect to sell all of those out while you're in construction phase is relatively over, or at least suspended. And what you should expect is be able to deliver products to the market and plug into the deficit that is available in the market to be able to make your revenues.
We've run out of time. Excellent discussion. Mr. Laide Agboola, CEO, co-founder of the Purple Group. Thank you so much for joining us.